We talked about Tesla bulls, and we're going to meet one in just a moment. In fact, one of the biggest ones on the street. But to preface that, Tesla's wild ride has left many of the analyst community in the dust. Check out where analysts stood just a year ago on this stock. Average price target was roughly $300 a share, just above where shares were trading at the time. Today, the average price target is closer to $500 a share, and that's more than 30% below where the stock closed today after that distinct sell-off. Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be. But our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
So you take out your lowest probability scenarios, you take out the ones that you think just aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are 3 sources for the increase in our estimate, our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally, that includes China, to something lower. Instead, it went up to 18%. And the reason it
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles. Their battery cost is 3 years ahead, 3 to 4 years ahead of any other auto manufacturer in terms of the cost declines. And so every other auto manufacturer will, if they want to be competitive with Tesla, and I'm including BMW and Daimler and all, if they want to be competitive, like for like, they will have to sell their cars at a loss at the same time they're losing their internal combustion engine business. So they have a big problem. So
are you confident enough in their ability to overcome what I would call sort of manufacturing hairballs that have struck them in the past and caused them to miss or delay production targets?
So nothing is in a straight line, you can't promise, but what they did in Shanghai was unbelievable, breaking ground and producing within a year. And I think they're taking those learnings elsewhere. In Germany, outside of Berlin, we've been thinking, okay, that's a setup for bureaucracy. They have been welcomed with open arms because Germany doesn't want to lose the auto industry, right? And they don't want to lose the jobs. So, and now we're hearing potentially about Texas. So we think they're going to surprise on the production side now. It took a lot of trial and error, just like with their Falcon rockets. When they were trying to land them, it was failure, 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 then success. And now they've been successful pretty much every time since. So I think they've gotten the manufacturing.
Cathie, when you take
down.
Tyler's question to the next level, do you dig in and get granular on the opportunities when you look at the sum of the parts? Is it going to be panels, autonomous drive, or batteries that are the new breakout? Because when we look to Tyler's point, when we look at the cars in production, everyone thinks they're an expert on what they can and can't do with Tesla. But is there going to be shockers going forward where there's going to be a breakout valuation on batteries because their technology is so far advanced?
Yeah, I think they acquired a company called Maxwell Technologies, and they've been very secretive about what that is going to do for their battery technology. So what I just said to you does not even incorporate Maxwell. So yes, we do think there are surprises on the battery front. They have their own AI chip for autonomous, the only auto manufacturer to have one. And James Wang, who worked at our analyst, who worked at NVIDIA for 8-9 years, took a look at those specs and said 4 years ahead of anything that NVIDIA is going to be able to produce, because it's single purpose, it's not general purpose. So we think they're going to be way ahead of the game on autonomous, and that's where the real surprises are going to be, because autonomous is a recurring revenue, very high margin, almost software as a service like opportunity, autonomous taxi networks. And what you have baked in the cake from the street primarily are low margin gross margins, more like auto, in the 25-30% range. We actually think gross margins, because of their battery technology, could head for 40% on the EV itself, and then the incremental revenues from autonomous would be in the 80% plus range. And we think that's what people are missing. And in our $7,000 target, so the scenario testing, we assume only a 25% chance that they're going to be up and running with autonomous within 2 to 3 years.
Karen, jump in.
Yeah, so kudos to you. I mean, you had what I thought was an outlandish target 2 years ago, or 1.5 years ago, and here we are. And so you have another one, maybe outlandish, maybe spot on. But let me ask you, when you get to this 7,000, to pick your more moderate case, what's it trading at? As a multiple of earnings, or as a what will that valuation then be?
So in 5 years, again, we don't really operate like that. We're just trying to figure out the cash flows and then discount them. But one of the things that I'd like to focus on is the reason this is going to be such a big upside surprise is because Tesla is riding the convergence of 3 major innovation platforms. Convergence. It's very hard to analyze this in the traditional world, right? Auto analysts are not robotics experts. They are not artificial intelligence experts or battery experts. We have 3 analysts working on this model together. All of them are characterized by exponential growth during the next. We are ready for prime time. The seeds for what we're about to witness now, not just with Tesla, but with genomics, with 3D printing, with everything we do. The seeds were sown during the tech and telecom bubble. The costs back then were way too high to play out, for those platforms to play out. The costs have been coming down for 20 years. We're ready for prime time. These are 3 exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value. This is all we do. We do nothing but disruptive innovation, because we have never seen as much disruptive innovation evolving at the same time ever. You have to go back to telephone, electricity, internal combustion engine. That's the last time we saw exponential growth on the order that we're going to see.
I want to get in one quick question from Dan, one quick answer from you.
Just real quickly, and this is near term. Do you expect volatility around earnings? There was in the last couple of years, but like for instance, they sold cars at a 450,000 annualized rate last quarter, right? And when you look at their net income, it all came from selling tax credits. Do you expect that to be a big component of it? And does it look like that at other places around the world? We're expecting really a lot of growth to come.
Quick answer,
subsidies?
please.
Yes.
They're going to get a lot of credits from companies like Fiat Chrysler, who's paying them $500 to offset. So we think that, but that's not in our models. We never include subsidies in our models. What we're talking about right now is Tesla is ready for prime time as an EV and AV manufacturer.
All right, you got to leave it there. Cathie, thank you very much. You've done your homework on this one.
Thank
Really
you.
appreciate it.
Thanks
Thank
very
you.
much.